What's going on, guys? So what I'm trying to do is break down my trade today. I made about $400 on Apple puts in my smaller account. What I'm trying to do is break that down. um, I'm trying this new thing so I can film myself and uh, screen record at the same time. I haven't figured out how to get rid of this box here, so I'll worry about it another time just because this is going to be a short video. So basically I just want to break down my trade, and right now we're looking at Apple on a 6-month chart. So we know that we're in a pandemic and the market's up and down, up and down, up and down, sometimes swinging 2,000 points up one day and 2,000 points down the next. When you're in a situation like this, the market's super sensitive to news. So when you get news like we got today or yesterday where they're saying we're getting to an apex on the coronavirus in New York, people will jump on that. We had a $1,600 gain on Monday, and then we get another gain today, and I've just seen this so many times. And even though we're in a bear market, when the market takes off, it becomes overbought very quickly. So I capitalize on this opportunity on Apple. I like trading Apple. It's actually pretty predictable. It moves a lot, so you can make a lot of money off of it on these big moves. So basically, if you're looking here at the 6-month chart, this is the swing on Apple on Monday. This candle right here on the right side of my screen. And you can see here we kind of bottomed out and came up, and we're getting higher lows, indicating a reversal and heading up, hopefully into a bull market. But for right now, this right here is huge resistance. The top of all these candles. And then you have a gap here, which is more resistance. But because the market swung up so much on a 1,600 point move on the Dow Jones and then popped the very next morning, I already know it's going to be overbought. But so how do I confirm that I'm right on this trade? Well, first of all, I do a lot of research, and luckily you can find some really good stuff on, for instance, Jim Cramer on Mad Money, and he said the same thing. And I'm thinking the market's overbought. Jim Cramer is saying the market's overbought, and if it's already overbought and then it pops the next day, it's definitely overbought. So I'm going to move this box down here so you can see. Okay, what I use when I'm going to enter a trade, or I've already entered a trade, is I look at a 5-minute daily chart. Once I broke everything down on a bigger chart and I move down to a smaller chart, I'm going to enter the trade, and I'm actually trading on the day. 5-minute daily chart. I don't use a minute. It's too fast for me. It fakes me out too often. That's just me personally. If you're a day trader, it probably works a lot better for you. But for options and maybe swing trading, I feel like it's a lot more difficult to use a 1-minute chart. 15 minutes is too slow for me, because a lot of times I miss a reversal just because it's too slow, and that's just my personal preference. I really think 5-minute chart is a sweet spot for me. So I use a 5-minute chart on a daily graph. Now I have it set up. I've got 3 moving averages. I've got the 8-day, EMA, 13, and 21. Why do I have these? It's important that you have fast and slow moving averages, because stocks do not always bounce off the same moving averages. Different stocks bounce off of different moving averages. Also, we know that a fast moving average crosses above a slow moving average, it's bullish. And if a fast moving average crosses below a slower moving average, it's bearish. For instance, if my 8-day crossed below my 21-day, we have a bearish signal. So here we have Apple, and by about lunchtime, we're already heading down, and we get this kind of run up. It's trying to gain back some of the loss that it did on the opening. And right here, these moving averages start to come together. If you notice back here, this orange line is my 8-day EMA. It crosses below and through my 20-day moving average and my 13-day moving average, giving me a bearish signal. Sorry, not bullish signal, a bearish signal. How do I confirm this? Okay, So if you look at when these start to cross over, you have a huge red candle. That's one huge indicator. The other indicator is this increase in volume as the stock is selling off. So it's supporting this sell off right here. So this is a very simple trade. So all I did literally is I took my idea of the market's overbought. I know Apple, I traded a lot. I think it's overbought. I'm going to wait for the right signal. Here's my signal. The market was positive around this point. I think it was around 600-700 points up for the day, and it starts to go down. Doesn't make a whole lot of sense because 3 out of 4 stocks go up when the stock market's up. If the stock market's going up and a stock is going down when the stock market is going up or is heavily in the green, there's a problem there. That's my third key. Another thing I use is the RSI. I also use on a different chart. I'm not going to pull it up right now. Is the accumulation distribution. I don't rely on my indicators. I don't rely on RSI or MACD or any of these things. They're like backups. They're kind of backups. They're just kind of like sprinkles on the cake. If you're trading strictly off of RSI or strictly off of MACD, you need to go back and do some research and look at charting. Charts, price action, volume. Those are the most important thing. Moving averages. Indicators, don't worry about that so much. I mean, it's great to have, and I got into all these indicators, and there's so many different ones out there, and it's super confusing which one to use, which one works better than the other, and you'll spend more time, trying to research and use indicators, and you're gonna, waste a lot of money trying to figure it out. So I recommend, because I did this completely backwards, I did the whole indicator thing myself, I highly recommend go back, look at the charts. You can literally Google the top rated charts. Pennants. I don't trade pennants because they have like a 55% success rate. I broke everything down to success rate. So look at the chart patterns that have the highest success rate. I can go into that in another video. But so all I did was use basic support and resistance after I got this bearish signal. Okay, I know that I have support right here. Let me pull up a line for you real quick. Oh, that's not what I want. I'm not editing this at all, so I apologize if I make a lot of mistakes. Okay. Right here we have daily support. Right around in here. So we broke through our daily support after getting a very bearish signal by our faster moving average crossing below our slower moving averages. So you just have a lot of different things backing this up. So we break through support right here, and we have another level of support. So before any of this over here happens, what should be going through your head is, okay, I got in this trade here, it's confirmed, I believe this stock's going to go down. What you should be thinking is, okay, where's my next support line? Okay, here's my next support line. So the next thing that can happen, there's only two things that can happen. This stock is either going to bounce off the support or it's going to blow through it. So you need to be making it, you're already in the trade, so you need to focus on your exit strategy. What is my exit strategy? If I hit support and it bounces, I'm out. You can always get back in if it comes back down and blows through support again. But if this bounced right here, I'm out. It didn't bounce. My moving averages stayed where they were and started to spread apart. And the further these spread apart, the stronger this bearish signal. Blew right through support. Right here. Let's go back to the 1 day. Okay, this is the high for the previous close of the day before. That's where our support was. If you go back, that's how you can kind of double check. But here you have a double bottom. Let's go back. So you blew through support here. You kind of got to run up, and now this old support becomes new resistance. So if you blow through this support is now resistance. So now that we're at this point of the day, before any of this ever happens, what should be going through your head is, I've got two options. The stock is going to continue down, or it's going to go up. And if it does go up, is it going to go through my resistance, or is it going to bounce off? If this busted through the resistance and closed out up here, I'm out of the trade, because this could continue to go up and then you lose all your profit. I waited very patiently. The volume started to pick up. This bounced off resistance. As it started to drop, the volume started to pick up right here, confirming another drop in price. And I actually probably should have got out down here, but I held on to it, and it ran up again. Same thing. Hit resistance. What did it do? Backed off. Hit resistance. Backed off. So now all we're doing here is building a channel. And actually, how I did this trade is I'm starting to implement a new rule, which is a 60-40 rule. I had to go back and I can't remember what time I got out of this trade, but it was somewhere in the last hour or so of the market that I sold. In the larger account, I had 5 puts. I sold 4 of them and let the last one ride. So roughly 60-40 rule. If I'm making a profit, I'll sell 60% or half, or 60% or 75%, and let the rest of it ride, because even if the other one takes off and you start to lose money on it, you're still going to make money, because that one option isn't going to take away all your profits. But that's it for now. I'm exhausted. I've had to work all day, a birthday party, trying to shoot some video. I'm going to bed. Peace.